You watch metals and markets every week, yet still shop with the big guys? Why pay more for your precious metals from the guys who have offices on Wall Street and who bank with JP Morgan? From the basics like eagles, maples, rounds, and bars, to collector coins like Silver Shield and Heroes, SD War Collection, to our exclusive new line of insurance, approved, TL-rated precious metal safes, SD Bullion is what you're looking for at the lowest prices, period. Guaranteed! Because if you don't hold it, you don't own it. SD Bullion, founded by stackers to help you prepare for what's coming. Shop with the doc today at sdbullion.com.
This is the Doc with SilverDoctors.com. In the wake of the Swiss National Bank shocking the market this week, depegging the Swiss franc from the euro, we have a special edition of Metals and Markets for our listeners this week. We brought on Jim Willie, editor of the Hat Trick Letter, found on GoldenJackass.com. It's great to have you back, Jim.
Oh, good to be back. It's been a while. It's been about 6 months or so. I usually check to see when was the last time, and I think it was June.
Yeah, about last June of 2014 is the last time we had the pleasure of having you on. Well, let's get right to it, Jim. I know we were discussing just prior to the show that you had been predicting this with the Swiss franc. Why don't you break down for our listeners this week's big news of the Swiss franc depegging from the euro? We had a 30% intraday move in the franc, which is just mind-blowing. And let's just break down the implications of it.
Okay, well, to begin with, I just want to say that for the last 3 months, I'm on record as saying that when we get into January, toward the end, and then into February, we're going to have an acceleration of breakdown events. I said that back in October, November, and December. Here we are. Just this past week, it wasn't just the Swiss National Bank with their depegging from the euro, but it was announcements that the Greeks are going to possibly leave the euro monetary union, leave the euro. The Greeks are going to experience some kind of a default, and the Syriza party, just all kinds of breakdown things regarding Greece, trigger events. We also heard that the Russians are going to formally exit all dollar-based oil trade. So they're going off the petrodollar. And then you had the climax with the Swiss National Bank news. I like to call it the Swiss franc news because what a move. It was up 27% at one point on a single day, and I think it closed up about, I'm not sure, I think it was 13%. There's been all kinds of attempts to interpret this. I remember covering this maybe about 18 months ago in the Hat Trick Letter, making comments like, well, they can't accumulate euros forever. I mean, there are limits. I think 18 months ago they had about $300 billion euros in their reserves at the Swiss National Bank. Well, that you just can't continue in that vein. So now I've been working the last 24 hours trying to find how many euros did the Swiss National Bank actually have when they pulled the plug on the peg, the 120 peg, the Swiss franc at 120 euros. They've been maintaining that since September of 2011. That's 3 years plus. That's insane. That this whole effort of market interventions and market controls is coming to a climax and coming to an end. The answer I got, I was guessing that they had at least 500 billion euros accumulated if they had 300 over a year ago. And the answer I got back from London Paul, he put his feelers out, and he said, Jim, no exact figures here. He just wrote me this morning. No exact figures, but I'm hearing rumors from a couple of different places that it's something like 700, 800 billion euros that they had. Okay, well, if they had all that, could they possibly have been doing a hedge with, short gold? And now they're reversing it. So they had a short gold position, they're covering it, and they're getting rid of their long euro position. So they're moving from the euro into gold. Do you think possibly maybe a few 100,000 big players might follow them and dump their euro and go into gold. We're going to see a string of rallies. We're already beginning to see it. We're seeing it breakouts in the gold price euro terms, breakout gold price in Swiss franc terms, breakout in gold price in yen terms, and the last one is the most corrupt currency, toxic currency of them all, the dollar. We're going to see a breakout in the dollar. I like to put forth some speculation here, John. I believe the Swiss National Bank didn't decide, hey, we got a lot of euros here. What do you say we do something and reverse our short gold trade and cover it with all these euros we're piling up in our basement? No, they probably heard that the Draghi Euro Central Bank decision to proceed with QE bond monetization was imminent, and it's going to really anger the Germans to the point where maybe the Germans give an inkling at the minimum and give some firm positioning that they're going to leave the euro. I think the Germans have been pretty much warning Draghi, you go ahead and print money and cover assets, not just bonds for sovereign, bonds in member nations in Europe. If you print money and cover assets in addition to bonds, then we're going to use the German High Court, and with legal means, we're going to declare your actions illegal for the second time. Their ongoing financial operation, I can't remember the exact name, but I got it wrong last interview. They've got a patch of a super senior bond, if you will, that has higher seniority than all government sovereign bonds. Gosh, where do they get the power for that? Nowhere. It's by decree. So the Germans, I think, are going to leave the euro, and the excuse will be, it's not an excuse, the grounds, the very firm, solid legal grounds will be the Draghi QE coming up. But it also could be that the Swiss anticipate with the Greek exit some big shock waves, some bank failures, a string of bank failures, and maybe together we're going to see a lot of derivative problems. Forex derivative tied to gold. We're already now starting to see the damage. There are about 20 different financial firms that are reporting like huge multi-hundred million dollar losses, trading losses. So this really cannot stand. There's probably a lot more. There are numerous factors going on here. I think that we're going to, I focus on the huge acceleration of breakdown events, but you could look at the microcosm of Europe, which is a big microcosm, and say you're going to have a huge acceleration of events just in Europe. The move to make South Stream go through Turkey and now linking it through Greece. This is just like an end around the EU and Putin and the Kremlin and Gazprom. They're attacking the periphery of Europe, and they're basically saying to Germany, you want to go down in flames with these American Nazis? Is that what you want? Americans need to wake up. This has been a big constant refrain of mine. Americans need to wake up. The neocons are Nazis. And when you talk about the Kiev Maidan, which just means kind of a rush on the palace guards, their coup d'etat, it was funded by the Americans. Nolan told everybody the U.S. had a $5 billion budget to make it happen. It leaked out that we funded the snipers on the rooftop that were killing people in the streets just to aggravate the situation. Then the United States stole the central bank gold out of Ukraine. Okay, enough about Ukraine, but the Russian actions in response to what's going on with sanctions, it's going to be going through Turkey and Germany with pipelines, the gas pipelines. And Russia also supports Syria and their pipeline efforts. So we got all these different peripheral attacks on Europe, and now we have an internal one with the Swiss. I think the Swiss have been in charge as sort of a gold coordinator. Remember, the Bank for International Settlements is in Basel, Switzerland. So any kind of a replenishment to make sure the London Bullion Market Association and the COMEX don't go dry of gold, that has a big player in the BIS out of Basel, Switzerland. But the Swiss National Bank, they must also be very well aware and monitor with data closely the activity regarding Asian usage of the Swiss refiners. So whether it's gold provision or refinery activity, the Swiss are coordinating this. So now we've got them reversing their short gold, long euro position. And you got to wonder if maybe the Swiss National Bank was well aware of, say, a bunch of derivatives that were about to blow up. So how did the Swiss National Bank make $38 billion last year if they were really hurting? Well, they made it on the back of gold, and they made it shorting the euro. So now they're going to be reversing it. Watch the gold price go up in euro terms. And watch the euro not just go down, watch the euro go away. This is nasty, nasty stuff.
That'd be a pretty amazing thing if that happened. Do you have any sort of timeline that you're looking for that?
Sometime in the future. Does anybody have a timeline? I gave you a timeline. I gave a lot of people with interviews a timeline. The end of January and the beginning and middle of February, things will start breaking down in a major way, in a broad sense. There's your timeline. It's the same question, the same answer. I don't know anymore. I don't know. What am I going to say? June 15th? I don't know. When will the euro go away? I don't know. When will the Germans break out of the euro? I don't know. Sometime soon, maybe this year, maybe by summer. I don't know. Does anybody know? Yeah, the architects.
Right.
But we mere mortals, we don't know. And some of my best sources are rather tight-lipped about this, which means two things. They know, and they can't say. And it's probably a lot sooner than we think. There's a kind of a strange wild card that I'd like to mention regarding Europe, and I like to bring this up from time to time, and it's really going to force fractures in the European Union. Russia came back with their own reverse sanctions. They're not going to buy any food and meats or, farm products. Okay. Now, apart from the fact that Russia lined up a huge South American trade for food supply, what's going to be the effect on Southern European agribusinesses, their giant farms? There's something like 13,000 Italian farms. I think they have the lock on small farm business in Italy. But Spain, France, and maybe Portugal to some extent, probably just Spain and France, they've got big businesses, big agribusinesses. All right, here's the wild card coming in. These businesses are all going to be hurting. We read 2 or 3 months ago that their output from the harvest didn't make it to market. A lot of them were rotting. They didn't make it to trucks going to market because the buyers were pulling out. Not just Russia, but Russia's not their only client, their only buyer. Okay, here's the wild card I'm leading to. The Chinese are going to come in and buy up European businesses in the farm industry. And when they do, they're going to divert 1/3 of the farm output to China. So the Russian sanctions have caused the Russian reverse sanctions, which is going to lead to a food shortage in Europe as the Chinese buy them up. Now, people might say, well, gee, that's speculation. Well, sure. It's also called analysis, with using the cranium and brain stem, which a lot of stupid ass economists in the West, in particular Wall Street and London, never bother to do. It's what's the party line? What do we need to see? All right, let's make a forecast around that. I try to put things logically together. In the United States, we already have the hay feed niche within the farm sector being bought up, those farms, alfalfa farms, etc., by the Chinese, and 1/3 of the farm output is going to China to feed their livestock. So I think it's going to be just one more break point for Europe to say, we're sick of these sanctions, and furthermore, we're sick of you pedophiles in Brussels and your commission, unelected, waging war. So this Swiss franc is, oh boy, a major, major accelerant to the European fires.
Now, Jim, as a follow-on to that, you've been predicting in your recent hat trick letters about revaluation for gold. Let's talk a little bit about the implications of the Swiss move, and you talked a little bit about how they're dumping the euro and going long gold. What are the implications for gold revaluation, for precious metals in general, with the big Swiss nuclear announcement?
Well, again, you have to kind of guess. It could be intelligent guesswork, but I believe the Swiss National Bank realized that the currency reset is going to happen. And I'd just like to fill in some background here. In late 2013, so we're talking about 13 months ago, the United States was one signatory on the global currency reset. Think of it as a financial treaty, a pact. So the global financial reset was to adjust certain currencies and bring in to the fold a few new ones. People talk a lot about the Iraq dinar and the Vietnam dong. Hey, I got news for you. The currency reset might involve them, but on the periphery. The global currency reset was for doubling the gold price. It was for tripling the silver price. It was for reinstalling the gold standard in the currency market. But rather than get all the Americans and the Western Europeans excited and pooping in their pants, they decided to give it a false name. The misnomer, global currency reset, is the reinstallation of the gold standard. The United States decided, wait a minute, this is January and February of 2014. Wait a minute, we're going to break this treaty like the United States has broken all of their treaties in approximately 200 years. And we're going to offer you a Ukraine war. And the first act, indeed, was to steal their 33 tons of gold. So my guess is the Swiss realized the global currency reset is going to happen by hook or by crook. And they saw what was happening with Draghi, and they are going to lead the European stampede to lift the gold price. There's so many factors pushing gold right now. The Greek exit, if it results in a bunch of bank failures, and we'll get to that later in this interview, we're likely to see another factor in Europe contribute to the gold price. If banks start to fail, for whatever reason, whether it's interest rate swap derivatives that New York can't handle anymore, or whether it's the energy, the oil price going down and really messing up Forex derivatives tied to the oil price, we might see all kinds of banks go down in flames. And if one or two big ones go down, you're going to see 15 go down because they're all lashed together, tied together after the Lehman Brothers incident in 2008. So if you see bank failures in Europe, you're going to see again a march, a stampede into gold. Now I'd like to make a very important point that since the U.S. blocked the Forex window as being where the gold standard would come back, the East, led by China and Russia and the BRICS, decided, okay, we have a response to this. We'll bring back the gold standard through the trade window if the Americans block the currency window. This is very important and goes way over the heads of most Americans that I talk to and communicate with, like in emails. I try to point out, if the world, maybe say 70%, the BRICS and the East and South American Mercosur and trade pact, trade union, and all Eurasian trade zone, if these nations and even Eastern Asia, I'm talking about Japan, China, and Taiwan and Korea, if they start trading outside the dollar, and you've got this foundation of 20 nations, 23 nations, all trading with China with their swap facilities in RMB, their currency, the renminbi, which is kind of a nickname for their yuan, or yuan. I get corrected by some Chinese clients. They say it's yuan. It's not yuan, it's yuan. Okay. You've got all this trade. If you got 60, 70%, like a critical mass of the world trade that's not being settled in the dollar, followed by a climax activity like the Saudis and OPEC announcing that, hey, sure, you want to pay in something besides the dollar? We don't care. Fine. Pay in euros, pay in Swiss francs, pay in yen, pay in British pounds. We don't care. Anything besides the dollar, it's okay too, but we'll still accept the dollar. They're going to say that. When they go to that, you're going to have all this critical mass growing. And all these nations are going to say, we don't need treasury bonds sitting in our banking system. And that's where it comes back to the U.S. through their bond window, which is like the twin. There are two sides to the Forex window. One side is bonds, the other side is currency. You know, sometimes a lot of people would say, yeah, we're just going to convert that to the dollar. And what's the vehicle? It's the treasury bond, the treasury bill. So the dollar is the treasury. It's not a twin brother. It's just the moving part, the bond, the part that pays a yield. So you're going to get this, not a back door. It's not back door at all. Trade is not a back door. Trade is a main door. It's the commercial door. And it's going to dictate the death of the dollar. You avoid enough and get critical mass of non-usage of the dollar, and you're going in trade, and you're going to see the treasury bond no longer accumulated and actually dumped and diversified. When that happens, the gold standard is like a knee-jerk, immediate consequence, and that's what's coming.
Well, Jim, we've already discussed the potential derivatives implications of the Swiss franc move. We also have billion-dollar moves and potential derivative implications with the oil price declining rapidly over the past 6 months. Let's touch a little bit on how the Saudis, OPEC, and the oil price might roll into this equation as well.
I'm of the opinion that the United States government and the Wall Street banker handlers that control through the coup d'etat that occurred in 9/11, a fascist coup d'etat, complete with the murder of 2,000 people. I'm convinced that they have lost control of the oil price and the dollar. And when you see press reports that the U.S. is boasting that they're trying to punish the ruble currency from Russia, and you know they like this strong dollar, and strong dollar is helping America, it's not helping the United States. They've lost control of the dollar. I think the dollar has been fractured. I thought a year ago, a little more, that the petrodollar was on its final legs. And there was a divorce that happened about a year ago now with the U.S. and the Saudis. You had a photo up a few months ago with John Kerry, Secretary of State, who's probably the weakest and most spineless of all Secretary of States that the United States has ever had. Closest rival is Hillary Clinton, who resigned in order to avoid treason charges. So that's not so much incompetence as it was traitorous. You had a photo op back in, I don't know, May or June or something with King Abdullah and John Kerry, and the press report came out saying that the Saudis are going to cooperate and keep the output going and maintain the lower oil price. Well, I think that's a bunch of rubbish. I think they were talking about the U.S. threatening the lives of the royals through terrorism, through ISIL, which is a Langley asset for those who are ignorant on the subject. Once again, the United States lost control of Iraq during our nation-building exercise, complete with helicopter gunships shooting down civilians. We lost control of the parliament, which is two-thirds Shiite, so we decided, let's pull out and put on the ISIL show, which is a Langley asset. Langley funded, Langley organized, Langley trained, Langley armed, and Langley directed out of the Ankara U.S. embassy in Turkey. So I think we are threatening the Saudis that we will kill them if they don't do what we tell them to do. And recently we're telling them, cooperate, don't rock the boat. And I don't know that we're telling them to increase their output. I think the Saudis have their own motive. I think the Saudis realize we've got OPEC competitors. The demand is falling. Why don't we bring down the price? Remember back in the 50s and 60s in the United States, well, you're too young for that, but I'm not. We would have what were called gas wars, gasoline wars, competition wars. They'd knock off 10 cents or 5 cents on a gallon and take it from 35 to 25 cents or 30 cents per gallon and just gather up a whole line of customers and sell a bunch of it and win the market share. Well, the gasoline wars resulted in lower price, benefits to the consumer. I think Saudis are doing a gasoline war right now to render harm to their OPEC competitors who have not really been in line for years. There's lots and lots of OPEC violations, and the Saudis are probably tired of them all. It's Angola and Venezuela and Nigeria and Mexico and Indonesia. They don't like them. They're competitors. So I think the Saudis are thinking, we're the lowest cost producer. Let's go screw them all. And, we'll give lip service to the Americans. I think this is a very big new topic and factor in the dynamics regarding U.S. relations. Tell the Americans what they want to hear. And then do what you want to do when they're gone. After they're done bribing and offering these, percentage ownership for queer little companies like what Hillary offered the Bulgarians, like what McCain offered the Bulgarians, like what Kerry offered the Bulgarians. And some of them have Biden's son as one of the executives of the corporation and to do a lot of the profiteering. So I don't buy this argument at all. There's some very important concepts to keep in mind, and that is the oil industry in the United States has about $2 trillion worth of shale bonds about to blow up. I didn't say 2 billion, I said 2 trillion. I believe that's bigger than the mortgage subprimes. So, did the United States government with Wall Street screw the oil industry by knocking down the oil price, or did they lose control of the gold, lose control of the dollar, and the implication was through the Forex derivatives, the oil price went down? When derivatives are busted and things break and the insurance contracts and all these different various derivatives are liquidated, they're liquidated in dollar terms with this phony, sudden dollar demand. So I think the United States maestros in Wall Street have lost control of the dollar. And you're not getting big benefits in the United States. Sure, you get cheaper gasoline, but no foreigner, well, very few, if any, foreigners are buying U.S. property or U.S. stocks or U.S. output from our reduced size industry, like manufacturing, machine tools, whatever, cars. You don't buy a General Motors car when the dollar just went up 15%. No, you look to buy a European car. You look to buy an Asian-made car. There's another phenomenon, by the way, and just in conclusion, the subprime oil bonds are going to blow up. They've already started. One firm went down in flames recently. I don't have the name at my tip of my tongue. I got it in my notes. It's in my upcoming January hat trick letter. You're going to see dozens of subprime bonds failing. There's going to be high-profile damage. So that's not going to be the only subprime damage that comes this year. There's going to be the car industry subprimes in the United States. 7-year loans, they don't make it. That's stupid stuff. That's designed to move inventory. It's designed to create a subprime problem that blows up a year or two later, and now time is due. The third area is student loans, where there's something like $1.5 trillion of student loans. So Where are the jobs for all the new student graduates? Nowhere. Well, they may get a part-time job flipping hamburgers or answering calls at a call center. Here's another unusual, not trigger mechanism as much as an indicator that tipped me off over a year ago that yes, it looks like the petrodollar is going to die. It had nothing to do with the Saudis. It had to do with the Brent oil price, the European oil price, converging with the West Texas US-based oil price. I watched for the longest time. We would say, well, we've got an $18 to $20 VIG there, spread. The Brent is higher. And then suddenly it was 13 and 12 a year and a half ago, and then it was 10 and it became a story. What's going on? Why is the big spread going away? And then in early 2014, there was no spread at all. And Euroraj, my brilliant colleague from London Bank Center Experience, shared with me, he said, Jim, this is the most visible piece of evidence that the petrodollar is dying. They cannot maintain the spread. It means that the Saudi participation, the Gulf Emirate participation, linking to treasury bonds is going away and probably being substituted by QE and artificial interest rate derivatives. So we're going into a completely managed bond market and completely broken oil market. This is incredible development. But oh boy. I think we're going to see a lot more coming regarding U.S. Treasury bonds being dumped. And you know, it doesn't really make the news, and I get the indications in indirect ways. Here's one way. You get news, for instance, a year ago that British Petroleum was going to be bought out of their stake for, I think it was called TK, I can't remember the name of it. It's a Russian oil company. I think it was ranked number 3 or 4. And it was a $53 billion buyout to get rid of British Petroleum, no longer to be having any interest in Russian oil industry. 53 billion. Well, how'd they get this 53 billion? Well, the Russians were lining up their treasury bonds to dump on British Petroleum's lap. It's called indirect exchange. So you get the stories like the Chinese are going to build a Tanzanian railroad. And you hear that it's, $1.5 billion or something like that, or some other acquisition purchase, or some investment like an expansion on the Red Sea in Saudi Arabia of a giant petrochemical plant. Well, how are they going to pay for it? Well, they're dumping treasuries. Russia and China are dumping treasuries. So I think the U.S. is trying to attack the ruble to drain the Russian reserves, and they're down from 160 billion a couple of years ago to about 130 billion now. What's the reserves of the United States? We talk in the press that Russia is this deeply damaged nation and they've got, oh gosh, we're really draining their reserves. Well, their oil price in ruble terms hasn't changed. They've got an effect regarding import prices because the ruble's down, so they're subsidizing imports with their reserves. They're not selling gold, they're selling treasury bonds. We're lying in the press with U.S. and Western propaganda. Big lies. Everything we talk about regarding the Russian situation is a lie, in my opinion. 90%, I put it at. 90% of all information is a grotesque lie. I've got clients. I got a client who's got a son in Moscow. I've got 2 clients who live in Ukraine. I got 2 other clients that do business with Ukraine and Eastern Europe. I have a pretty good line of information in what's going on with Russia and Eastern Europe and Ukraine. So we've got all this dumping of treasury bonds, and we say Russia's weak when they have 130 billion in reserves. The United States has 18 trillion in debt. Who's weaker? Russia has a gob of gold. I hear from The Voice every few months. He said, well, that's kind of funny because the Russians might say their official gold reserve quantity is gone from 1,045 tons to maybe 3,000. They might put that shock in there for the Western nitwits to gobble on. But, if truth be told, the Russians have over 20,000 tons of gold under the Kremlin in the vaults. So who's weak? The U.S. with its $18 trillion in debt and missing Fort Knox gold that Bush, Clinton, and Rubin stole? Or the Russians? We're the weak ones. Here's how silly it is, John. Putin has at his desk a switch. And if he decides to reach over and push on it, the dollar's dead. The dollar is dead. And gold will double in value. They're not going to do it, China and Russia, not until they're done draining London and Switzerland of their gold. So did the Swiss action tell you that the gold drainage is done from west to east, primarily China? I think yes. And we're going to see a rise in the gold price. I don't want to see a rise in the gold price so much, although that's wonderful. I want to see the COMEX shut down. I want to see it under legal lawsuit challenges for dishonoring gold futures contracts and not delivering gold.
I think most of our listeners are with you on that one, Jim, for sure.
Well, here's another tidbit. I've been wondering for the last year, why did Scotia why have they been providing gold to Goldman Sachs, Citigroup, JP Morgan? Why are they supplying gold in a massive drain, one-directional supply chain? Why are they supplying Wall Street with their valuable Canadian gold? And I found out why. From a guy who had pretty good connections in Toronto and knows quite a lot. He said the suspicion was that the heart attack from the founder of Scotia Makata was not a natural heart attack. It was induced by the Bush family. And the rest of the executives who are running Scotia Makata are scared. They got similar threats. I mean, do what we say or you'll end up the same way is the message they all got. So through murder, Scotia Makata is following suit and obeying the Wall Street boys who are pretty much done raiding the GLD fund. I reason that its effective zero level is somewhere around 600 or 700 tons. And people might think, well, that's kind of a silly thing. What do you mean by effective zero? What I mean is, well, that's what they've got. Exclude the 600 or 700 and they've got nothing in the vaults. The 600 or 700 is what is in motion from the mining firms on trucks in any given year. The commitments from the mining companies. So Wall Street's running out of places to raid. I still think they've got some more to drain out of Scotia Makata. Given how much the Vatican is bending, I would say the Vatican's probably close to done providing London with gold. Given the Swiss decision, I think they're realizing that maybe the Bank for International Settlements in their own country tipped them off that there's not going to be much of any more provision of gold. So we're turning turning the corner with gold here, John, and it's exciting. But honestly, if you were to ask me, what's the gold price? I don't know. Is it $1,220, $1,250, $1,300, $1,320? Is it $1,190? Is it $1,400? I don't know. Do I give a good damn? No. I don't look at the COMEX price. If Walmart sold televisions, but you couldn't walk out of the store with one, would I care what Walmart sold televisions for? What their price was? No. I don't give a damn what the COMEX says the gold price is. I care about things like what's the premium paid by the Asians on large multi-million-dollar gold purchases. And what I'm hearing is minimum 35%. That's a $400 premium. And key word, minimum. And when the voice told me that, he repeated, minimum. And I said, could it be like several hundred or even 1,000? And he said, yeah, at times, but let's just stick with 35%, minimum. So when people get discouraged that the gold price is going down from the COMEX, I say, why are you so dumb as to look at it? What's wrong with you? Why don't you look at all the stories that are providing dynamic crowbars that are going to break open the whole gold market, the whole bank situation, the whole Forex situation simultaneously? I'd like to just read you something that I came together and it grew on me because oh, here's another one. Oh, here's another one. The Greek exit is going to blow up the European Union on the fiscal side, meaning budgets and austerity and all that. The Swiss National Bank, which we've covered, is going to break up the European Union on the currency side. We've already talked about that, and that's going to be, linked with gold, which is the king of currencies. Then you got the U.S. government sanctions against Russia. That's going to break up the European Union on the economy side. And maybe an interesting crowbar coming with the farms, as I mentioned, Chinese buying them up. Then you have Germany. It's going to blow up the European Union on the monetary side because they don't like what the European Central Bank with Draghi is doing. And then you've got Ukraine. It's going to break up the European Union on the energy side, a threat to the pipelines, the gas provision, gas supplies. So, with the Greek exit, the Swiss National Bank, U.S. government sanctions, Germany, Ukraine, I think the European Union it's dead. When it dies, gold is going to zoom. We may not need Shanghai to double the gold price. They might be laughing that Europeans are stupid enough to follow American Nazis by following orders of European commissioners who've never been elected, following fascist guidelines. I think they're trying to wreck the European economy in order to make it simpler to fold it under the global fascist state. You can't do that with a thriving economy. You need to break it. The United States has become an expert at breaking economies. How's QE doing? Economists are numbnuts, John. I'm sorry to say it, but they have yet to figure out. I've only read one or two economists ever coincide with my viewpoint that QE will kill the economies by wrecking capital and retiring it due to the higher cost structure response. QE is not stimulus. All it does is it adds to liquidity in the financial sector. But the response on the tangible economy side, Main Street, is higher cost structure because bid up comes the commodities. Now you're seeing kind of an end to that phase, which is a magnificent paradoxical phenomenon. Now that the QE has wrecked the Western economies, you're seeing the oil price disconnect from the treasuries and the dollar, and the oil price is going down. So the last stage of this wrecked economic phenomenon from QE is the falling commodity prices. It's not just, I think this very small factor is reduced demand. Reduced demand, therefore lower price. Well, that does not explain it. No, what you have is the derivatives that tie the oil price to the major currencies are all broken, and they're being liquidated, adding to demand for the dollar, which disconnects, and the same mechanisms react to a rising dollar by bringing about a falling oil price. Now you're going to wreck the oil industry. Their capital budgets are going down. Projects are going down. There's some very strange phenomena going on with the oil industry, and let's see if I can bring up a fascinating detail. About 65% of the Canadian oil and gas rigs have been shut down just since October. 65%. And you got a similar kind of damage on the U.S. side. So you're going to see these bonds, these subprime bonds for the oil industry, they're going to start collapsing, John. And this is just amazing stuff that's going on. You can't continue like this. We got strains that are absolutely incredible.
Yeah, those are some shocking numbers, 65% just since October.
I found the data. Here I've been leafing through a Microsoft Word document. Wreckage in the oil fields. Oh God. Okay, first of all, as preface, here's how important the shale oil output is. Since 2007, so we're talking 7 years, 85% of all global oil output, marginal new oil output worldwide, has come from shale. And then, I got it wrong. It's even worse than what I said. Since November 26, so we're talking about, my gosh, a month and a half, we have 64% of all Canadian oil and gas drilling rigs shutting down. They've gone from 438 rigs to 156. Oh gosh, it's less than a month and a half. The date is January 2. So 5 weeks, 64% plunge in Canadian drilling. Unbelievable. And you probably get confirmation of things like that by looking at the drill rig rental price. Fascinating what's going on, and I've got a linked article on how the U.S. rig count has seen the biggest drop in 6 years. But that's just a headline, and I don't have that all the data, but you get the idea.
You're making the case, Jim, that 2015 is shaping up to be the most interesting year since maybe 2008 or 2009.
We're going to have a repeat of Lehman, but Lehman was a kill job to prevent Goldman Sachs from having a financial failure. What we're going to see this time, I think, is several Western banks go down. Notice we had an event a year ago. It was one of the largest Portuguese banks, Banco Espírito Santo, BES. And we heard that they had a bankruptcy, and one of their main subsidiaries also had a bankruptcy, both in Portugal. And then about a month or so later, 2 months later, it became a non-story because the European Central Bank bailed them out. Well, I think what's coming now as a result of gold derivatives, notice I mentioned all those different currencies where gold is having a breakout, the yen, the euro, the franc, probably the British pound and dollar too. That's going to cause damage to Forex derivatives. And banks, not for their credit portfolio, but for their casino portfolio, they're going to be losing big. And then they're going to be losing big on their oil derivatives. This is game over. I said October, November, and December. We get toward the end of January, you're going to see an acceleration of events toward breakdown. I was taken off balance in the last week with 3 big events from Russia, Greece, and the Swiss, all within 5 business days. I thought, oh my goodness. I said to a friend, we get events like this once every 2 or 3 months in 2013. Now we got 3 in 1 week. And I like to bring back my quality control wisdom. Back in the 80s, fresh out of graduate school, I did quality control work as a consultant for Digital Equipment Corporation on the manufacturing side. We used to have a measure, what's the time between failures? And we call it mean time between failure, and we would study it. And it had certain distributions. And, I was pretty good at stuff like that. I came up with a quality control process that saved the company a lot of millions of dollars by refining their accelerated testing. But the point is, the mean time between failures is a very important statistic that indicates systemic breakdown. And the system for digital was the computer system. The system here is the global fiat currency system backed by sovereign, worthless, toxic bonds. we're seeing an acceleration in the time between failures. Unbelievable things happening. This is game over.
Well, Jim, before we let you go, if you could let the listeners know where they can find your work in the hat trick letter.
It's www.goldenjackass.com. On that site, you'll find a main page. It's a public page. It contains lots and lots of interviews. A year or two ago, there weren't as many interviews. Now there are twice as many. People are noticing, the hosts are noticing. I've got a lot of correct forecasts. Our team has produced a lot of really good analysis. There's also public articles. There are fewer of them because when I get invited to do another 2 interviews in a week, I don't have a lot of time to put together a public article, and besides, I just used up some of the material. And like with this today, I'm not going to turn around and say, well, I'm going to go write a public article. No, I'm going to turn around and say, I got to meet the deadline next Saturday and Sunday. I got work to do. But the hat trick letter for several years, I think since about 2007, has been 2 reports. What used to be called the macroeconomic report, after Lehman, I changed its nature and theme to the global money war report. And from the start, the golden currency report has been going on. And this month, I have a change. I'm going to have a single report. It's going to be perhaps a little bit larger, but it's going to be, chock full of dense information and some good analysis, some good contributions from my team. So it's going to be the Global Money War Report as we get this year a return, at least great progress toward a return to the gold standard. It'll happen through the trade side, the back side, the commercial side. It will not happen through the currency side because the U.S. is going to obstruct it to the death. And this is the year I think we're going to see solid indications, John, for the replacement to the dollar in order to guarantee imports.
Jim Willie, editor of the Hat Trick Letter, found at goldenjackass.com. It's great to have you back, Jim.
Well, it's a pleasure being on, and let's keep watching the money supply go up, and let's keep watching the money velocity go down. That's your sign that QE is killing the system, not stimulus. It's killing capital.
All right. Thanks for tuning in to this special edition of the SD Metals and Markets from silverdoctors.com.
Those individuals who are in charge of monetary policy around the world, I think they're very much aware of what is coming. When I've asked Federal Reserve Chairman in the committee about this, they never said, no, that's not going to happen. They use the word orderly. As long as it's orderly, it seems to be okay.